I want to just maybe explain to people that never have been in the trading business. I mean, traditionally, the pit traders in Chicago, what they would do is they would sit in this big pit with 200 guys in there, and they would look up there where all the brokers were there, and they would see the Goldman guys and these guys and these guys, and they would watch, okay, who are the orders coming from? What are they doing? What are we hearing in the pits? What's the buying? What's the selling? What's the volume? And that was the way that they would try to get the edge. As a trader on Wall Street, right, you would have the squawk boxes. So the guys are shouting down what's happening. You're looking at the screen. You hear the FX guys talking over here. You hear the Bloomberg guys. Then take another 10 years later, you got guys in the city with 12 screens because they're trying to watch the news. These are all incredibly imperfect ways to try to trade the market. But back then, that's maybe all that was available. Nowadays, you're saying, take all that information, which was probably 1/10 of 1%.
Yeah, exactly.
And it was slow through a human filter. And that assumes you're not in the bathroom, you're not at lunch, you're not asleep.
It's the same thing. It's like all of that information, but just like nowadays, there's a lot more information available, all of that information on steroids. So, if you look at when we did used to listen to the outcry or the squawk box, right? Yeah. I knew who the best traders were. I knew who the big traders were. I knew who the good traders were. And they'd be like, oh, 50 cars, 100 cars. Those are, da-da-da. We knew who the traders were. We knew who to listen to. That's the same thing with like inflows or wallet action. So depending on our data provider, you can track wallets. You can track inflows and outflows, and it's the same thing. Everyone knows certain people are doing certain things. It's most likely to have a bullish effect. And certain people saying certain things is most likely to have a bearish effect. So it's very obvious. And then, that's the most beautiful thing. And like you said, bathroom, sleeping, lunch, dinner, whatever. Yeah, I mean,
or bad day, or not paying attention, or I didn't sleep well, or I had a fight with my girlfriend. All these things mess with your mental.
You can't sit glued to a screen, and if you do, you will be having issues mentally.
Investment Club. Today, I consider it the best investment that I've ever made. We get 4 projects presented a week by their associated CEOs. Personally, I'm completely blown away by the quality of these projects, and I know of nowhere else where I would be given this same opportunity. Each week that passes, I feel more appreciative of the fact that I'm a member of this group. The vibe was just tremendous. Everybody's on the same wavelength. We just clicked. Everybody listened to each other, enjoyed their company. It was just magical, magical. Take action. Don't take my word for it. Due diligence you need to do. And I really hope that someday down the road I see you in the club. It far exceeded expectations, without question.
I remember when I moved from Bankers Trust to the First National Bank of Chicago. So here I was in Chicago, and again, it was a little out of the loop of Manhattan, but we were literally like 2 blocks away from the pits. And so sometimes after work, you'd have drinks with them. Now they would get off at 3 and start drinking at 3:15. This is the way they worked. But I remember I knew some of the big locals down there, guys that had been doing it for 10, 20 years that had made 10, 20, $30 million. And one of the guys said, he's like, I only show up on the floor if I'm clear mentally. If I've had a big argument with the missus the night before, or if I'm angry, or if I'm feeling sick, or I haven't slept, I literally won't show up because I know when I do, I lose money. That just shows you how that human component is such a big factor and why most people probably make terrible decisions.
No, you're 100% right. People, back in the day when you were discretionary trading, you had rules. Like, if you lost this much, you would have to sit out for this. If you lost 2 days in a row, you'd have to sit out for this. If you won this much, you'd have to sit out for this.
Interesting.
We had these rules. Why? Because everything was mental. Everything would screw you up. If you came into the office and you looked like crap because everyone knew that you got into an argument with your woman, your biological woman, then you would have an issue because you're not going to focus. You're thinking about all that crap. Maybe she's blowing your phone up, whatever it is.
Yeah.
You have issues. So this eliminates those issues because I don't care if you're the best trader in the world, somebody's always going to have bad days. And this algorithm eliminates that. And for people who are maybe the best traders, okay, you can quantify your strategy. So, even the best traders got to go to dinner, got to eat, got to sleep. They can quantify it very easily, and then they can probably be better traders because they're trading more.
Yeah.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.